Welcome back to Mining Stock Daily. Ian Wagner here with a corporate update from a company that is new to us at Mining Stock Daily, maybe to you too, Blue Moon Metals. Blue Moon is a critical minerals company with operations in the United States and Norway. Their flagship project is the Blue Moon mine in California, a high-grade zinc and copper deposit with production targeted for 2028, which we will get into. And they also hold the Springer Mill complex in Nevada, the Apex germanium and gallium mine in Utah, which was the only historical primary producer of those metals in the Western world, and two copper projects in northern Norway. The company trades on the TSX Venture under the symbol MOON and on the NASDAQ under the symbol BMM, with a market cap of roughly $440 million US. We have Christian Kargl-Simard, CEO of Blue Moon Metals, with us today for the first time to talk about the company's hub and spoke strategy, the critical minerals opportunity in germanium and gallium, and what 2026 looks like from the operator's seat. Christian, welcome to Mining Stock Daily.
Ian, nice to meet you and nice to be on.
Blue Moon Metals was a completely different company, 18 months ago when you joined, and even at the start of this year. When you joined, I think in 2024, for one, the stock was sitting around 40 cents. By the time you closed a bought deal last October, you guys had re-rated to over $2. And then almost immediately you're acquiring Apex, announcing Gauge, announcing this hub and spoke strategy. Just kind of walk me through what you've done the last 18 months, and then really what is the company today and what's your focus?
Great question. It's not a 1-minute answer, so I'll jump right into it. It starts with my last company, Adventus Mining Corporation, which we were trying to build a copper mining company with a base in Ecuador. Well, we got a fully permitted copper project in Ecuador. It took too long to permit. When we finally got the permits, our share price was trading at an all-time low. The stock had lost all of its momentum. And unfortunately, we had to do an M&A transaction, which was best for our shareholders. That mine is in construction right now. Silvercorp will have that in production next year, but we didn't get that platform for growth. The opportunity to take over Blue Moon presented itself in the third quarter 2024. We thought Blue Moon was a very interesting asset, but also an interesting, call it shell, to take over and to build up. Our learnings from Adventus were third world country, greenfield project, unpermitted, very difficult. All three very difficult. Blue Moon has completed the opposite. We are first world, brownfield, and permitted. We've taken our best team and some of the key shareholders, and our goal here is to deliver as many critical metals mines into production in the Western world that we can. And so clearly there's a sense of urgency. That's what our team is operating on. And fortunately, we've been able to build a shareholder register that's growing in a fantastic kind of path very quickly to support us to do so. So in the world, there's maybe half a dozen junior companies trying to build a platform for critical metals production. No one's doing two, we're in construction on 2 mines, let alone 4. And coming back from Washington yesterday, kind of introducing our US business, they would like us to have 4 mines yesterday. So we're doing crazy things in this company. Right time and right place, though. The company is growing so fast, and there's been so many changes that you actually incorrectly said in your introduction that our flagship is the Blue Moon mine. Yes, we're building it, but it wouldn't be the flagship. I don't even know what I would say our other mine that we're constructing in Norway, New Seer, is our flagship. The most valuable asset that we have today is Springer tungsten. It's the tungsten deposit that sits underneath the Springer complex, which off and on used to be the largest tungsten mine in the United States. But 6 months ago, that would have been 4th out of the 5th most valuable asset. So the priorities are changing, which makes it exciting, but also stressful, I guess you could say, as a team. Like we need to be thinking about this business dynamically. The quick story is we picked up Blue Moon, took over the company with Haitham Hodaly, on the board, who's currently CEO of Wheaton, and Maurice Belanger. We didn't know our timing to construction in California, so we went off to Norway, bought the two main assets there that are permitted and that have scale. We closed that about a year ago. A year ago today, we had 4 employees. Today, we've got 130 permanent and employees and contractors. Then 3 weeks later, so April 2025, we had our permits to build a mine in California. Then we realized we had to build 2 mines, starting construction 2025. But we didn't have a permit to build a mill to support the California assets, so that got us to find the Springer complex outside of Reno. That's a permitted processing complex with lots of tailings capacity. We announced that in October when tungsten prices were $500 a ton. We closed that in February. Tungsten was $1,600 a ton, and today we're pushing $3,000. And that resource slash reserve that is historical is pushing $1 billion NPV8 after tax at current pricing. So now we have a hub and spoke processing complex that is very malleable in terms of growth, and we have this very important tungsten mine, which the United States needs yesterday. There's no domestic tungsten production, and it came with an APT circuit, which is super important. An APT is an ability to upgrade tungsten concentrates to an intermediate tungsten product, which is super important for machining aspects, powders for different alloys, etc. And then we start thinking about hub and spoke model, and Tech calls us last October with this Apex opportunity. It was a competitive process, but it kind of fit like a glove. So we announced that acquisition about a month ago, closed in March here, 2026, and Apex can provide 100% of the domestic U.S. needs of germanium and 50 to 100% of gallium. And the idea would be to open up that mine fairly quickly and then transport that ore to Springer, where we would build a new processing line. So the focus is building Blue Moon, Nucir, Springer Tungsten, Apex, next 4 years, go as fast as we can. Lots of interesting financing discussions. The organization's going to grow quickly. And if we are successful in doing so, we would have built an 80,000 ton per annum copper equivalent business at first quartile cash costs. And to put in perspective, I think 2 relevant comps. Foran Mining just got acquired by Eldorado for $2.8 billion US, with a target of called 35,000 tons of copper equivalent production. So less than half at second to third quartile cash costs. Or you could think about Aero Copper, an established producer today in Brazil. They're 60,000 tons per annum at second quartile cash costs, and they're $3.5 billion Canadian market cap. So I think there's enough asset value here to get us to kind of 3.5 billion Canadian market cap, and we're currently around 700 million Canadian.
Okay. So a lot to unpack there. You guys have been busy and you're going to be busy with all those assets. So just, understanding the opportunity there with Springer makes sense. I think just a little bit before we jump into kind of the germanium and gallium thesis a little bit, because I do want to unpack that, because some of our audience is not going to know what those elements are, why they're important, especially today, right? Because that market has just changed so much in 12 months. So just before we go that, I just want to very clearly walk through the hub and spoke in the sense of from doing the research, you're going to mine the zinc and copper in Mariposa, bring it to Springer, but you're also, going to be bringing stuff from Apex Engage to Springer, and then you're going to be taking that up to BC, right? Because you will have a processing relationship with Tech still at their smelter. Is that correct? I just want to make sure that I'm understanding and our audience is understanding kind of the chain here of how you're going to work all these minerals in.
Yeah, the rate limiting step for building mines in the United States, but everywhere, is permitting processing capacity, which is really tailings and water. And it's helpful to have the other utilities and logistics as well. So Springer's on private land in Nevada. That's very good. Permitting agencies are very supportive of mining. They understand mining. It is a large property, which gives us flexibility to build additional buildings with different processing lines. So we would expect to have at least 3 processing lines here. One for tungsten exists today, one for Blue Moon, which would be a new line, and one for Apex. There is an existing half-mile by half-mile tailings facility that is permitted and has hardly been used. That is very valuable, and we could look to split that up into 2 or 3 quadrants for different tailings materials to go into it. But also, it's in a dry area of Nevada. Well, all of Nevada's dry, but you can permit a dry stack tailings pretty easily as well. It's got water, power, natural gas next to the Union Pacific line and I-80, tucked away a little bit behind a mountain. So it's like perfect for this campus, I'm going to call it. So yes, we are going to be transporting ores from different mines to that facility. The tungsten is already there. Then the downstream product is pretty interesting. We could sell a tungsten concentrate to the smelter in Nevada or to the other APT plant in Alabama. We could upgrade our own concentrate using the APT plant. And we have a downstream user that wants to build a tungsten powder facility there next to the APT plant. If we sell off our concentrate, we can use the APT plant as a merchant tungsten concentrate producer, which has a ton of value right now because the world has no APT plants, and without it, a lot of industries fail. So lots of interesting conversations around that. Then we talk about the copper concentrate and the zinc concentrate from Blue Moon. The copper concentrate will be sold somewhere. We're trying to make it a made in North America solution, but there's not that many copper concentrators left. The zinc is going to go to Teck's Trail smelter in Canada. Apex, we will produce likely a hydroxide product at Springer, and Teck has the marketing rights to that. So that product may go to Trail, but Trail may not have the circuit to maximize payability on that product, and there are other places in North America where it could go. It's important from a strategic perspective, to maximize the germanium and gallium recovery.
Okay, well, that's a perfect segue into germanium and gallium, and just kind of unpack the thesis a little bit. I know China controls the vast majority of global supply, and they've had export restrictions kind of tighten and then partially ease. Just kind of from where you sit, maybe just explain a little bit of the usage, but also the landscape of the marketplace and just the political backdrop. You were just in DC yesterday. You talked about, explaining the U.S. side of the business there. Just kind of paint us a picture kind of those two elements and how they fit in.
I'm going to say gallium, germanium, and tungsten because they all fit in the same bucket, and you could put antimony in there as well. Those 4 are in a special grouping. They're not rare earths, but they are difficult to find and most important process. They all have significant domestic application, but very important military applications, which are only getting more important as you see the war in Ukraine and now in the Middle East. China controls the processing of those metals, in particular on tungsten, gallium, and germanium. And the topic of export bans of those materials to the United States is like front and center. And so we know the United States, Western world, important users of these products are very concerned about that supply come end of this year when these export ban waivers maybe come off. And just for a long-term business plan, I know that some of these downstream users don't want to source the material from China. So
Sure.
we have at Blue Moon the potential to control 3 of those 4 materials for the United States. So you can understand the urgency and our urgency as well to bring that product to market. What is so interesting about Apex Mine is that the concentration of gallium and germanium in the ground is 100 times higher than what you would normally see in nature. And so we can produce a mine that the throughput targets 100% of the domestic demand.
The
And that's
resource is that big,
well, 200 tons per day, which is a small mine, provides
right?
100% of germanium in the United States. And would be on a plus 10-year mine life based on 1 breccia pipe in the district, and there's 6 others that have been mapped but really not drilled. So I think it could be a really long-term supplier of that product. Normally, gallium and germanium, not normally, all the time, gallium and germanium is a byproduct of either zinc concentrates that go to a smelter that produce a residue. That residue gets transformed into gallium and germanium, like the Tennessee smelter that Nearstar has. They recover gallium and germanium in small quantities in the fly ash from the smokestacks from like coal-fired power plants,
Right.
also from the Bayer process. Also, those are the main sources. So it is byproduct normally from lots of different small sources, and then they get aggregated. Apex is a completely different beast. It's one supply source that can solve all the problems. Uh,
So
so
kind of
it's really
small but niche, right, and
small but
necessary.
niche. And you may ask, or one of your questions might be, why is Teck selling this? Teck is changing the form of ownership of the mine. Their shareholders don't want them to be building a 200 ton per day mine. But they took shares in us in a growing business that's pretty interesting. They love this hub and spoke model in the Western U.S. And they're going to be involved in the overall business going forward, advising us on technical aspects, marketing aspects, and maybe other growth pieces in the business. They are the Western world's largest germanium producer already, so their knowledge in this space will be helpful for us.
That's a great also segue to kind of your shareholder base, right? Because it does include tech, but also some funds, Oak Tree Capital, Hartree, Wheaton, Altius, big names. How and just to back up to something we kind of glossed over at the beginning was that last October you raised I think $86 million bought deal that allowed you to kind of go out and advance some of your projects or purchase some of your projects. Just kind of talk about what are those shareholders seeing in this business model that excites them, and what kind of support have they given, and how is that working with your goals and your leadership?
Well, I swear that 6 months ago I didn't want to be called a Department of War mining company, but I explained at the beginning how we got here, and the opportunities here, and our duty is to provide these kind of products to the market. Our shareholders love, how this company's transformed. The meetings that I have today with existing or potential shareholders, the conversation is dominated by Apex and Springer Tungsten. It's like 50 minutes of a 60-minute meeting is about that. Those are our two most valuable assets right now. Super timely. At current pricing, the EBITDA margins are ridiculous. Like combined, or each of Springer and Apex, if they were in production today, would be north of 200 million a year of EBITDA. If we had the APT plant going at Springer, it would be close to 300 million just of that asset. So the kind of re-rate potential on providing more concrete numbers and timeline to the market on putting those to production is $1 billion or $2 billion of market cap. We just acquired them. We're trying to get up to speed on the assets as quickly as possible, hiring teams around them. In the case of Springer Tungsten, we need to twin some of the historical holes to upgrade the resource to current 43101 standards. We're about to start dewatering the shaft. We need to understand exactly how long that's going to take. We likely will have a technical report out around the end of this year. As we advance to production, we hope by the end of next year. In Apex, we need to take bulk samples, which we're working on right now, to do metallurgical work to confirm a new flow sheet, upgrade that resource to current 43101 standards. So, on one aspect, these are historical mines with historical production, historical reserves and resources, permits, and I would say that's much more valuable than a greenfield project in moose pasture. But we don't have that, the nice reports with a bow on it.
Sure.
So we're in that part of the de-risking or unlocking process. But the biggest disconnect right now with our analysts that cover us and the story is that our 3 analysts, soon to be 4, give an in situ value for Apex and Springer Tungsten of between 75 million to 100 million US. And they don't now properly value with mine plans, what our imminent plans are for the 2 assets. And if they did, their target prices would be double to triple what they are.
Right, because you talked about an EBITDA of $200 million a year.
Each from each asset. So I think we have a $9, $10, and $12 Canadian target. Those would be $10, or those would be $20 or $30 targets. So they're working on that right now. But that's the fun part of the business right now.
Do you think that's just because the story has changed because the company has changed so quickly, or more so because of the markets and the assets are just not fully well understood? Or why do you think that is? Disconnect?
It's a combination of both. We closed. Well, first of all, the tungsten price is up like 10 to 20% a week, so you can't keep track of that. But we just closed on tungsten in February. There's all sorts of conferences that are going on at that time. We announced Apex in the middle of PDAC. We are arranging for dozens of investors and analysts to go to Springer over the next 2 months. It shows really well. Apex, there's not much to see, but there is what I'm going to call an institutionalization of those assets, and that includes the analysts that has to happen. A lot of the analysts that cover Blue Moon cover base metal companies. They don't cover tungsten or gallium or germanium companies. So there's a knowledge uptick that's required.
Sure.
And we haven't publicly stated that we are putting these into production. Like, we don't have a final investment decision. From a public disclosure perspective, it looks like Blue Moon will be integrated with Springer with production in Q1 2028. And Nucir in Norway will be in production in Q3 2027. We haven't inserted, actually tungsten is going to switch order with Blue Moon yet. We haven't said, but that likely will happen. And then Apex is just our new shiny toy. So it's on the come. But I can tell you that every day there's at least one new institutional or family office, institutional investor or family office starting a position in the company every day.
Okay, so you have a lot to do this year, both on the company side, the narrative side, the asset side, resource side. Are you guys now funded up for that? Or you have plans to raise additional funds, or where is sort of the treasury sitting as far as you looking out for the 2026 goals?
Yeah, building 3 mines, even though there are 4 mines, even though they're very capital efficient, takes a lot of capital. And I see the buckets that we can draw from is we've got a project finance facility with Oaktree and Hartree that's covering our Norwegian assets. Um, on our strategic, gallium, germanium, tungsten discussions are ongoing now with U.S. government, an endorsement, cheap debt, maybe equity. That's a key goal for me this year. But I don't think investors should say it's a shoe-in. It's a process, but it would be kind of a really nice. It would be a nice icing on the cake. Let's call it. And sooner than later would be awesome, especially since there's urgency to put these into production. Then you have the ability to do streaming and royalty financing, so all of our assets are royalty light and low cost. So there's a package that we can do there, and then there's the equity markets. So those are the different pieces I'm working with. I probably need 500 million US to build all four. Hartree and Oaktree is 140 million of that.
That's your credit facility?
Yes, that's right. Stream credit, it's already been announced, stream credit equity facility. A US government type deal, who knows what institution yet, that could cover 150 to 200 million. Royalty streaming, I think there's 100 million there very easily. And then there's the equity markets. So we're going to try to sequence all of that in an appropriate manner. We will raise more equity this year, but we could, if we do it right, we could be raising equity at much higher prices.
Well, listen, I know you have to run, and I think that's a great place to leave it there. There's so much we didn't cover. We didn't even get to Norway, really, but would love to continue to catch up with you on the story. You a really interesting business that you're building across multiple elements and multiple states and this hub and spoke strategy. So
yeah, no, there is a lot to unpack, but it's like four companies in one. So that's also cool. Like this company in the United States alone will produce 8 different products, and we're planning to build 4 mines. So when I think about this story, I feel like it's unique globally. It's the best asymmetric bet in mining, with the kind of your downside protection on the different commodity exposure over different mines. We didn't talk about the exploration upside. I think we almost need to do a second episode just to dive into each of the individual assets. But pleasure to talk to you, Ian, and I look forward to doing it again.
Yeah, absolutely. I think that's a great idea. We'll definitely catch up with you soon, because there's a lot of moving parts, and I think it's important for people to understand the story, because it is, like you said, because there is 8 different products coming out. So, but for today, I'll say thank you, Christian. That's Christian Kargl-Simard, CEO and Director of Blue Moon Metals. Again, they trade on the TSXV under the symbol MOON, and on the NASDAQ under the symbol BMM. Thanks so much, Christian.
Thank you, Ian.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.